Hey everyone, this is Chris. Welcome back to the channel. So we just got earnings reports from Google and Microsoft. I can give you a little bit of spoilers. Not so great. Google's more of a disappointment than Microsoft. Let me just look at some of the details here. And I can already see the stocks are down. So usually like you check in the after hours and you see, oh wow, stock is down. Something must be bad. Okay, so Google's revenue, 69.1 billion. That is a 6.1% increase. Okay, so you guys are wondering, okay, so why are shares down? So their revenue is going up 6.1%, but guys, revenue isn't the full story, right? Because the shares are down 5% already. Sales are up. Oh, so last quarter sales are up 41%. So that is a major slowdown in growth, right? And search business reported revenue of 39.5 billion, an increase of 4.3%. So basically growth is just slowing. I can see it right here. And advertising revenue went down. Oh crap. Advertising revenue, Google's YouTube fell 0.2% to 7.1 billion. That's the first time since 2020, guys, that their YouTube revenue, and I'm on YouTube, so that doesn't bode well for me. Doesn't bode well for Google. So I think that's the big story right there. Is that and guys, understand this. When you're talking about stock, you're buying company based on its essentially future earnings, future cash flow. You know, the future. That's what you're buying on, right? The same way that if you're going to invest in a house, you're saying, okay, I'm gonna buy this house, thinking that people are going to come in and rent it out. And this is something that we've worried about before, is slowing ad sales. We knew this with Snapchat. We've known it with Facebook / Meta. It's not a surprise. This is the one thing that I warn you guys about with something like a Google, is that they are dependent on essentially the economy. If the companies go bad or companies slow down, the first thing they do is they cut their marketing budgets, right? So this is something that's very, very, very real. I don't just make stuff up, guys. So we were right on that. We just don't know what's coming. So essentially, they're just slowing down. They still make money. They are still a profitable company, but it's slowing down. I'm just looking at this stuff here. So Google's not really affected by Apple's change in privacy stuff. Facebook, Meta / Twitter and Snapchat, any kind of social media. So they're more affected than ours, than Google. So let's see, earnings per share. So they came in at $1.06. The estimate on Wall Street was $1.25. So they missed on their earnings per share in terms of estimates, right? They're still profitable, but they just came lower than expected. Wall Street expected 70.5 billion in revenue. They came in at 69, so they missed there. So the way you would say it is that they missed on their top and bottom line. Top line being your total revenue, money coming in. Bottom line being after you take out your expenses and stuff like that, how much money you make. So they missed on both. They're still profitable, but they missed on both. And then YouTube ad revenue, Wall Street expected 7.42 billion, and they came in at 7.07 billion. Their cloud looks like they beat. They came in at 6.9 billion, and it was expected 6.69 billion. And then traffic acquisition costs. This is important for Google. Basically, what it is, you want lower is better. It's how much do you pay to like sort traffic around to different things, right? So one of the things that you guys may or may not know with Google is that they're a search engine, and when someone types in something, like literally Google can control what you see, and essentially their costs are coming down here. Traffic acquisition costs $11.83 versus $12.38, but it's the revenue growth, right? And their YouTube, so the revenue growth is slowing, right? 6% growth versus 41% growth, and then their ad revenue went down about 2%. Let me see the other thing else they can read. They're just slowing down. They're still profitable, but just slowing down. That's the big gist of it. They're cutting their hiring. We've talked about that before on the channel. I'm just reading through the stuff and to see anything else that worth mentioning. Cloud computing division. increased 37.6%. Okay, so that's only 6.9 billion of their revenue though. So you know, I mean, even if it is increasing, it's not big enough. It's their ad revenue is just killing them, I think. Um, hmm. Yeah. So their Google's net income. Okay, this is like how much money that they're making. 13.9 billion net income, and that's a decrease of 26.5% when you compare it to last year. So that's not good. Um, so even though their revenue increased, remember their bottom line decreased, right? And we already knew that from the earnings per share, that was down. But this is just their, you know, more details of what their income is. Let's see, and I don't think, you know, it's not like Google's a bad company, guys. Just you want to be realistic about growth. So growth is slowing, and YouTube revenues are down, and that's up with that. So what about Microsoft? So I saw that Microsoft was down in the after hours also. Let me just see if there's any details worth mentioning with Microsoft. So they're slowing down. Same with Google. Um, hmm. Earnings per share. So they beat on Wall Street at 235 per share versus 230 was expected, and the revenue also beat. So why is the stock down? So the revenue is up 11% year over year. I can see this. Their income went down by 14%. So even though Microsoft is beating what Wall Street estimated, right, this is something where sometimes people get confused on this stuff. You have to understand like that there's more than just beating Wall Street estimates. You kind of want to have a better performance than you did last quarter. The idea is that your company is continually growing is the basic idea. Remember, because you're being on this. So this is something that's not so good. Net income by Microsoft fell by 14%. Yeah, not so great. And their gross margins are also down. What else here? Global shipment of desktop and laptop computers in the third quarter is down 18%. So their sales of computers, right, both desktop and laptop, essentially how many computers they ship, is down 18%. So, but we've known this before. Dell has reported slowdowns in computers. Apple, we're going to get their earnings report also coming, but we know that these sort of the PC industry has been slowing down. That's why the chip companies have all been slowing down. What else here? They're trimming employees. This is over at Microsoft, and also to, let me read this here. I see. So Microsoft gets, and actually, guys, we talked about this this morning. Microsoft gets a lot of their revenues from overseas, right? So global currency is really going to hurt Microsoft more than other. Well, I don't say more, but just it'll hurt them a lot. Like any company that does business overseas, the currency really hurts them. So strong dollar is not so great for Microsoft, and this is gonna struggle with them. So, you know, this is it is what it is, guys. One thing that's kind of interesting, so I'm just reading this here, is the video game industry may end up being okay for them. That's kind of a defensive part of their thing, because one of the things is like if we all you know, don't have any money and we just stay home, we're all gonna be playing video games. It's pretty funny. Let's see. Yeah, revenue sales from Windows went down 15%. Shipments from computers are down. Personal computing. Yeah. So, you know, guys, you know, this stuff isn't shocking. This is sort of why, you know, we talk about these, and I prep you guys ahead of time. I usually what I do is telling you guys, I have a general idea of where the market's going, and I have a general idea of where companies are doing, and then kind of what you're doing when you read through the news, right? So, for example, when we go with the news every day, we talk about who's hiring, who's firing, these kind of things. Talk about where is the growth, right? Which companies, which industries, where do we expect slowdowns, this kind of stuff. So when you look at this stuff together, it looks like we're on a lot of this stuff, right? We were talking about selling stuff to consumers is probably going to slow down going into recession. We're talking about advertising is going to slow down, right? Your ad revenues from like your LinkedIn and stuff like that, or not revenue, but your use. I think people are still going to use that stuff. I mean, I can see it here. And one of the things too is there was a there was a report. It was yesterday we talked about it where Amazon is freezing their hiring on their cloud, which is a bit concerning. So, again, I mean, one of the key things right here is the income from Microsoft is down by 14%. So I see. So I missed this part. Last quarter, Microsoft got a $3.3 billion tax credit. So creative accounting and tax breaks do help your bottom line when you get that. And that sometimes that's a one-time thing, right? So, we'll see. Let me see. What's their actual stock doing right now? So give me 1 second here. I can check what they're doing. It was weird. The market was up today, and sometimes they fake you out in that way. So Microsoft's down 1.62 in the after hours, so they're doing okay. I think Google's going to take the bigger hit. Yeah, they're down about 6% in the after hours as recording this. And this is sort of was my concern as well. I was thinking Microsoft was going to be stronger than Google, mostly because Google, just their focus on their advertising and stuff like that. So I would say, and I've said this several times, Microsoft's going to be the strongest out of, I think, Google, Amazon, and Apple will be weaker because, again, any exposure to consumers, right, just your regular people, the more exposure you have to regular people who are suffering with inflation, be it energy costs and stuff like that, they have less money to do other things, and it slows down everything. And remember, too, 7% of the U.S. economy are consumers, and also, too, any kind of companies that have global exposure also have trouble. But I think Microsoft's just so big. They have so many facets to where they're not necessarily relying on one particular thing. So that's where Microsoft's a little bit different, right? They just have so many divisions. Google, like, for example, they just don't sell that many Pixel phones to really make a difference. Whereas, like I said, Microsoft has a different revenue stream. So anyway, that's my thoughts on these things. Love to hear your guys' thoughts on this. Are you bullish or bearish going forward with, say, like your Amazons, your Apple, and Meta's left? So we're going to see if anything can come out in good news. But, I think for a lot of people out there, if you just look at numbers only and you say, oh, well, the P ratio of Google looks good, you got to understand sort of what industry something's in and what outlook could be. So thanks again for watching, everyone. Hope this is helpful, and I'll catch you in the next video.